I've got a hot take for you that you may not want to hear. Just because the Federal Reserve has started cutting rates does not mean that the markets are going to see an instant pump. And yes, that includes crypto. In fact, in previous rate cutting cycles, when they first start cutting rates, the first month or two are actually very disappointing. Everybody starts yelling that the bull run is here, but the data, yes, there's actually data to back this up, and it will tell you to actually take a step back and slow your roll because stocks and crypto don't always rip right after the first rate cut. Let's zoom out and take a look how rate cuts impacted the S&P 500 when it was near its all-time highs since 1980. So check this out. In the following month after rate cuts, the returns of the S&P 500 historically have been pretty lackluster. Sometimes they're up, sometimes they're down. Most of the time they are flat. But in the next 3 months, they start to look a little bit better despite this 19.8% drawdown from 1989. But in the next 6 months to the next year, it really starts to look good. You have a 100% chance based on historical data that the S&P 500 will be up pretty significantly. And the reason why this is because rate cuts are not the spark that lights the ignition. It is actually the Federal Reserve making risk management decisions. The Fed did not just say that they are cutting rates to zero right away. They are taking a prolonged approach. But unfortunately in crypto, people are super bullish. In fact, too bullish, which is why when they start to realize that the Fed is actually taking a more cautious approach and not just pumping the markets, the prices in crypto actually remain flat. And if they do go up, it's not very significant, at least for the first couple months. The market needs to see real growth. They need to see liquidity actually flowing in and not just a lower policy rate. So if you were expecting an instant pump after these rate cuts, I'm sorry, but the data disagrees with you. But without real macro follow through, you will get a lot of chop and a lot of fake outs. So let me know in the comments, are you trading the headline or are you trading the history?